Hello everybody and welcome to this lecture. In this lecture we will be dealing with something that is called in the marketplace MACD. MACD, MACD, which is short for Moving Average Convergence Divergence. Moving Average Convergence Divergence, or MACD. Now, instead of giving you the entire theoretical explanation of what MACD is, how it was formed, let's rather look at how we apply it, and then you will also understand why it was created and what it is really for. Where do we find MACD? First of all, just like with every other indicator, we will find it in this somewhere in this entire list of indicators. On here, you'll remember we have trend indicators, where we also looked at, for example, the parabolic SAR. The MACD, however, is an oscillator, which is a different kind of indicator. And there it is, MACD, MACD. As usual, you can also insert the MACD by going to Insert, Indicators, then going down to Oscillators, and you'll find the MACD over there. It is, however, far simpler to just simply click on it, drag it onto your chart, and release it, drop it onto your chart. We do not change the fast EMA or the slow EMA. We do not change the MACD SMA. What we do, however, need to pay attention to is what we apply this to. Now, by default, yours will be applied to the close price. Please make sure that you change that to the median price. We're not going to get into the whole reasoning behind it. You don't need to really know the reasoning behind it. Please just make sure that you apply it to the median price. Just going to show you again. By default, it will be on close. Please make sure that you change it to median price, and then we hit OK. And voila, here we are. Our MACD indicator has appeared below our price action chart. Now, at first glance, we can already notice quite a few clear characteristics of the MACD. It consists of bars and a red dotted line. It also, just as our price action chart, has peaks and troughs and curves, and it moves, and we can see clearly that it tends to move with the movements that we see on our price chart. Now, I'm going to give you just a few pointers on how to apply the MACD. I'm going to show you what exactly to look for and what it means. Once you know what you're looking for, once you know what it means, you will know how to apply the MACD as part of your overall market analysis before you decide to enter a trade. First of all, we will see that there is a 0.000 over there. That is the zero or neutral level of the MACD. Now we'll see that the bars appear either above the zero level or below the zero level, like they do over there. When the bars appear above the zero level, we say that MACD is in positive territory. And when the bars appear below the zero level, we say that the MACD is in negative territory. When we see that the red line, which is indeed the moving average of the MACD itself, is above the bars, like it is over there, we say that the MACD has moved below its own moving average. And when the bars are above the red dotted line, like they are over there, we say that the MACD has now moved above its own moving average. it's important to make those notes. Please feel free to pause the video at any time and review any of this important information. We can also very clearly see crossover points where the bars go from above the zero line to below the zero line and back above the zero line again. Now, the way I'm going to explain the MACD to you is by pointing out these things that I've just told you about. A quick recap: whether the MACD is trading in a positive territory, i.e. the bars being above the zero line, or in a negative territory, i.e. the bars trading below the zero line, whether the bars appear above the moving average, the red dotted line, like they do over there and over there, or whether the bars appear below the red dotted line, like they do over there and over there. And we will point out the crossover areas where the bars crossed over the zero line, either into the negative or into the positive. The way I'm going to do that is way over here. If you'll recall from the how to use your MT4 Trader platform lecture, you have your vertical line over here. I'm going to select a vertical line, and I'm going to place it first of all at all of the crossover points where the bars have crossed over the zero line, either above or below. We have one of those points over here. I'm going to mark it out, and then I'm going to just draw a line at the same spot into the price action chart area. Oh, I do apologize. I have selected the horizontal line instead of the vertical line. Here we go, the vertical line in the same spot. And I'm going to do that for every crossover point. There's another one over there. And again, I actually chose the horizontal line because I use it so much in my own trading that it is a habit by now. Now let's extend this vertical line up into the price chart area. Oops, nearly went for the horizontal line again. Here we go at another crossover point. Going to make sure that that extends into the price area chart as well. That is what we first of all do when we analyze what a MACD is telling us. We first of all identify the crossover points and draw the vertical lines between those crossover points and our price action chart. The next thing we do is we identify the highs of the MACD and the lows of the MACD, whether they be in the positive area, positive territory, or whether they be in the negative territory. And we mark them out in exactly the same way. We take a vertical line and we identify the lows that we can see clearly from the left of our chart all the way through to the end of our indicator. Now, if you are struggling to follow what I mean by peaks and troughs, or highs and lows, or tops and bottoms, please refer to the lecture that deals with tops and bottoms, highs and lows. And that lecture deals specifically with the price action chart, but exactly the same rules apply in identifying a top and a bottom, or a peak and a trough on the MACD. We have to have a situation where when we look at a trough or a bottom or a low, we have to have two bars to the left higher than the one that went the lowest, and two bars to the right higher than the one that went the lowest. We can see it over here. If you look at this bar, which I'm going to mark out here, we see that neither this bar nor that bar pushed below this one that I've marked out. This one was indeed the lowest. And to the right, we have at least 1, 2 that also did not close below this, which means that this was a trough or a low or a bottom on the MACD. And again, we extend that line into our price action chart by just drawing in another line. Now let's find the next one, whether it be a top or a bottom. Now remember that the MACD also is a trend following indicator. Now when we see something like this where the bars were just around the zero line, that means that the market was in a range and we don't have to pay attention to this. Let's rather look at where we can see more defined tops and bottoms. Here is a top, for example, which we're also going to extend into the price action graph by clicking another line into position. Here we clearly also have a top, and let's extend that one. And over here we have a bottom, which we are going to extend. And then we're just going to do one more over here. One bar off, but that's not going to be the end of the world, which extended into the price action chart area. Now that we have identified these points, we need to figure out, what do they tell us? What do we do with them? When we see them forming on the MACD, what does it mean? The first ones we identified were these crossover points, where the bars of the MACD crossed over from either the positive territory into the negative territory, or from the negative territory into the positive territory. A crossover point such as that is a warning. It is a possible warning that the trend is going to change. Where we have had a bearish trading pattern over here, for example, it started pulling back, it started correcting, and then the MACD warned us over here that we might indeed have a trend change again back into positive territory, which means a bullish price action. When the bars are in the positive territory of the MACD, that indicates that the market is in a bullish price action. When the bars are in a negative territory on the MACD, that indicates a bearish price action. And that's very simple, and it's very clear to see. Here's actually a quite important one that I did not mark over here. By one I mean a top on the MACD. Just going to extend it over there. Now we're going to go through every single one of these vertical line areas that we marked on the MACD, and we're going to see when that occurred, what happened in the price chart, because that'll teach you practically hands-on what to do with the MACD. When you see certain things happening on the MACD, what do you expect the price action to do? Now, here where we had a bottom forming on the MACD, and a few candles later, we saw a few MACD bars later, we saw that the bars started pulling away from its own moving average, a further confirmation that the market might now be heading into a bullish price action. Here we had our initial warning that there might be a change coming up. Here we had our second warning that there might be a change coming up. And we can see after that, after this initial warning, after the second warning, indeed, the price action did go up. The market went into a bit of a range over there, corrected a little bit, went into a little bit of a range. Then the bars went back into a positive territory over there, and indeed the bars extended above the moving average within the positive territory, strengthening the indication that there might be a bullish pattern continuing. So we had our crossover into the positive territory. The crossover was strong enough in order to push the bars above the moving average red dotted line, indicating the possibility of a bullish price action. And what happened? Boom. There we go. Even with this correction over here, and this, by the way, happened over a weekend. It is very, very rare to see this on the Forex market. This is referred to as a gap. Obviously, it's a gap. Very rarely does that occur in the Forex markets. There must have been some kind of an announcement or political issue happening over the weekend, which made the markets a little bit nervous, because when the markets opened, it jumped so quickly that it wasn't even represented by a candle. But even with this gap in mind, MACD stayed in a positive territory. The bars stayed above the red dotted line, the MACD's own moving average, indicating a possible continuation of our bullish behavior. And we can see over here, we had a changeover, warning us. Here we can see that a top formed on the MACD, that the bar started pulling down below its own moving average, warning us that the market direction might change, or the market might go into a range. And that is exactly what happened. The market went into a range. Yet, MACD remained in a positive territory. It remained above the zero line, indicating that there hasn't been a proper warning yet that there might be a change in trading direction, a change in the direction of the price action. And here we had a trough or a bottom in the MACD, kind of at the end of this range over here. Then we had a breakout out of the range. Here we had an indication where the bars moved below the red dotted line, the moving average of the MACD. We had an indication that there might be a change again, which in this case was a correction. And if you want more information about what a correction is and what a breakout is, you'll need to refer to the lecture that deals with Fibonacci's and market channels, specifically the linear regression channel. Here we had a crossover then from the positive territory into the negative territory, with our bars pushing below the moving average, indicating that the market isn't quite yet done with its correction. So the market at this point here, over here, is not offering us an entry opportunity. Then we see the opposite happening again, bars pulling above the moving average of the MACD, warning us, giving us a heads up, saying, hey guys, watch this instrument. You might pick up a trading opportunity at some point. We had the crossover back from the negative territory into the positive territory, and it ended up being quite a strong crossover with the bars closing above the moving average, and bam, what a nice strong trade that turned out to be. Let us have a quick recap, guys. MACD, moving average convergence divergence. You don't need to go into the technical details, because what is important to you is what you're looking at and how you need to apply it. Very, very important, guys. Please remember, I state this in every single lecture. Do not ever use one single indicator, whether it be an oscillator, a trend indicator, whatever it may be. Do not ever use one single indicator to make a trading decision. Use a combination of indicators to confirm one another, to clarify the picture that you're seeing, and only then do you look for an entry opportunity. All of this comes together beautifully in the last lecture of our training course, where we put all of this together and then look at how we choose our trading entry points and how we choose our exit points and where we place our stop losses. So point number one, MACD is a moving average convergence divergence, consisting of bars either being in a positive territory or being in a negative territory. We have our moving average of our MACD. We have clear troughs and clear peaks, tops, bottoms, whatever you want to call them, within our MACD itself, indicating to us that there might be a possible change. Do not take it for granted, guys. Do not now all of a sudden jump into the market when you see this happening. You say, this is a definite. No, it is a warning, telling you that there is a probability or a possibility. So if, for example, you were in this bullish trade over here, when that top formed and the bars crossed below the red dotted moving average line, it could have been an indication to you that this is where you should take your profit. This is where you should exit the trade and wait patiently for the next entry opportunity. And that, in a nutshell, guys, is the MACD, the moving average convergence divergence. I hope you found this lecture helpful. I hope you found it understandable, and I look forward to welcoming you in our next lecture. As always, guys, trade safe.